review. And let's start out by taking a look at the grain markets, see where we closed for the week. March corn closed 6.5 cents lower. The March contract right at just shy of the 359. Beans up 4 cents for the week in the March contract at 872 3/4. Moving on over, taking a look at the cattle market. Cattle took a big hit this week, down about $6 this week, a little over $6 at 129.95 is where we settled in the February contract today. February hogs, last trading day for the February contract today, we closed at 65.95. The April contract closed at 70.37, and that's almost steady in line with last week, up 7 cents from last week. Taking a look at the energy markets, lower again as well, still trading at the time of this broadcast, but crude oil is down roughly $2 on the week at $29 after making new lows this week. And the dollar's down about 100 points this week, still trading as well, flirting with that 96 point level. Quiet week in the grains as far as volatility is concerned. We did have one of our reports, our monthly supply and demand reports this week. One of the least anticipated reports of the year. We'll just go over a few numbers here for corn. We were looking at not much of a change or expecting much of a change in the carryout for corn. We were sitting last month at 1.8 billion bushels. We raised it about 35 million bushels, 1.837 to be exact. What we seen was an increase in imports, 10 million bushels, with the idea that we might see some corn coming into the southeast. Cheap ocean freight still out there. We could see some corn coming up from South America, and we've seen the crush actually increased as well this week. But we've been running ahead of last year's pace to this point. But we also did whack exports somewhat, a little bit as well. So all said, the exports and the imports offset the increase in the crush, gave us a little bit larger carryout. From a world perspective, we actually seen the corn carryout just about the same, steady. Not a whole lot of concerns there as South America wraps up their first corn crop and are on their way of planting their second corn crop as we speak. So, very narrow trading range, very tepid response to the report. We've seen a 3-cent trading range upon the release of the report. We've seen a total of an 8-cent trading range this week. So just doesn't seem to be a whole lot of interest right now in this corn market. It seems to be biding time at the moment. Exports this week was disappointing, even with the revision lower on our weekly or on our monthly supply and demand report. We didn't meet what we needed to meet as far as total bushels to continue this pace. So we're going to have to see a pop in corn export in weeks to come, where we could be looking at another adjustment down in the next monthly supply and demand report. As I mentioned earlier, ethanol grind is continuing to perform quite well. So we are seeing the grind ahead of last year's pace at this point. But we are also seeing ethanol stocks grow, and in fact this week was a record stock amount, taking out the highs from a few years ago. So the supplies are growing as well, so that will be a concern or something we need to keep an eye on in weeks, if not months, down the road. So as we look forward again, it looks like we're just going to buy time in here until we can get closer to that spring planting time, or the talk of acres over the next several weeks. And beans, a very tepid response to the report as well. We did see an increase in carryout. We were at 440 million bushels last month. We increased to 10 million bushels at 450, and that was by just reducing the crush. We left exports alone. That's something we'll have to keep an eye on over the next few weeks is exports, but we'll have to keep an eye on the crush as well, the process of grinding the beans, making meal and oil. We do have our NOPA, our monthly crush report, next Tuesday, so that'll be something to give us a little bit of direction But to this point, South American weather has proven to be not a major concern, as Brazil is well into their harvest right now. Argentina recently received some very timely rains over the past week to 10 days, as they're entering, a lot of their beans are entering the flowering stage down there right now. And right now, as we look over or in the forecast down there the next 2 weeks, we're looking at actually a little bit below normal temps and bounce of rain coming in. So there just doesn't seem to be much on the weather front to cause any type of concern of South American bean production. Also, there isn't any concern at this point as far as deliveries or continuing to export those beans, but those are items that are going to pop up over the next several weeks, maybe the next several months, and how quickly can South America get those beans shipped out of Brazil and Argentina. But at this point, it looks as we're stuck here in a range as well, and again waiting for the spring planting season and or some type of major outside influence to give these grain markets, any type of direction here. Taking a look at the cattle market, cash disappointing this week. We're down about $3 in the Southern Plains, right around 133, as we've seen some trade anywhere from 129 to 32 in the Corn Belt this week. Boxes were a little bit weaker this week. It's choppy, but a little bit weaker. It seems as if, though, the cattle futures are tied to the equity markets, with the equity markets testing lows, 2-year lows this week. It seems as if cattle has followed suit to some extent. But we are trading the futures at a discount to cash. That may provide some support here. We'll see if we get a little more trade yet today. Last week, the majority of the trade on a very light trade was done 7 o'clock on Saturday night. It may be on a Friday night. We might see the same type of cash trade this week, but looks as if 133 is catching the majority of it again in the south. Onto the hog market. Cash hogs seems to have caught up with the futures anyway at this point. This was the lightest kill of the week so far as numbers are concerned. We're seeing some concern in exports backing off, and pork a little bit. Not only pork from recent months, but cattle as well. But when you take a look at the charts here in the hog futures, it looks like we could be putting a double top in some of those summer months. $80 certainly is providing an area of resistance to push up through. I would take advantage of these areas and get some hedges in place or some price protection for hog producers. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.